U.S. inflation experienced a slight dip in the previous month thanks to more affordable fuel, alleviating the burden of rising consumer prices in the nation simultaneously. The most recent data on consumer inflation indicates persistent upward trends in specific sectors, such as services encompassing rents, restaurants, and auto insurance. As reported by the Labor Department on Tuesday, the Consumer Price Index edged up by a mere 0.1% from October to November. In a year-to-year comparison, November witnessed a 3.1% increase, a slight decline from the 3.2% rise observed in October. However, core prices, excluding the volatile elements of food and energy, exhibited a 0.3% increase from October to November, marginally surpassing the 0.2% uptick recorded in the preceding month on an annual basis. Core prices showed a consistent 4% rise, matching the figures from October. The Federal Reserve deems core prices as a more reliable indicator for predicting future inflationary trends. The persistence of inflation within the service sector of the economy is likely to keep the Federal Reserve vigilant during its upcoming meeting. Fed Chair Jerome Powell has been closely monitoring such costs as indicators of whether underlying inflationary patterns are subsiding. Services prices, including hotels, healthcare, and entertainment, are significantly influenced by wages due to their labor-intensive nature. While wages are still on an upward trajectory, they have moderated since the peaks observed during the pandemic. Illustratively, restaurant prices rose by 0.4% from October to November for the third consecutive month, resulting in a 5.3% increase compared to the previous year. Rental costs have also contributed to inflationary pressures, accelerating from October to November. Although real-time data from entities like Zillow and Apartment List suggest a deceleration in apartment rent growth. In contrast, gas prices experienced a notable 6% decline from October to November, reaching a national average of $3.15 per gallon as of Monday, according to AAA. Grocery prices exhibited a modest 0.1% increase in November, with a meager 1.7% rise from the previous year. Notably, prices for staple food items like bread, beef, chicken, and pork all witnessed declines, while several goods prices, including furniture, clothing, and appliances, decreased last month. Used car prices saw a notable increase of 1.6% in November. However, they remain nearly 4% lower than their levels from 12 months earlier. The comprehensive nature of Tuesday's inflation report is likely to steer the Fed toward maintaining its benchmark interest rate during its imminent meeting conclusion on Wednesday. Despite inflation surpassing the Fed's 2% annual target, the cooling inflationary trends might dissuade officials from further rate hikes, at least in the short term. Even if the central bank has concluded its rate hikes, it is expected to maintain its benchmark rate at its peak for several more months. Powell has cautioned that the Fed might consider raising rates again if necessary to curb high inflation, having raised the key short-term rate 11 times since March 2022, in line with the Fed's preferred inflation gauge. Core prices exhibited a 3.5% increase in October compared to the previous 12 months, slightly lower than the central bank's forecast of 3.7% for the final quarter of the year. The steady decline in inflation has led to speculation about potential interest rate cuts next year, with some economists suggesting the possibility of cuts as early as March. However, Powell has consistently dismissed the idea, emphasizing that it would be premature to speculate on the possibility of Fed rate cuts during his recent statements earlier this month.